Let me tell you about Robert. Robert ran a consulting business from his spare bedroom. 62 years old. 30 years at the same manufacturing firm before the buyout. Now he works for himself. Every April, he sits down with his accountant. Every April, he hears the same question: did you track your expenses? And every April, Robert feels that familiar sinking sensation. Because he didn't track anything. Not systematically. A few receipts scattered in his glove compartment. Some charges on his credit card statement he thinks were business-related. Maybe. His accountant estimates his deductions. Conservative estimates. Safe estimates. Robert knows he's leaving money on the table. He just doesn't know how much. Turns out, about $4,000 last year. Here's what researchers at the European Commission discovered when they studied tax compliance behavior. People don't avoid tracking expenses because they're lazy or irresponsible. They avoid it because of something psychologists call cognitive load. Your brain has limited processing capacity. Research from Chapman University showed that when people face complex financial tasks, they make poorer decisions, not because they lack intelligence. Because their working memory gets overwhelmed. The 2014 study found something striking: compliance costs increase dramatically when tasks require detailed record keeping. People simply stop doing it. Think about Robert's situation. He needs to remember which coffee meeting was business-related, which miles he drove for client visits, which software subscriptions serve his consulting work. His brain rebels against this complexity. And here's the costly part. According to research published in the Journal of Economic Literature, self-employed individuals commonly miss between 15 and 30% of legitimate deductions simply due to disorganization. That's not tax evasion. That's money you're entitled to keep, but you're giving it away. Let me show you what Robert was missing. Health insurance premiums. As a self-employed person, he could deduct the entire amount. For his family, that's typically $6,000 to $12,000 right there. Home office expenses. The actual expense method lets you deduct a percentage of your mortgage interest, utilities, insurance. Robert's home office occupied about 12% of his house. He never claimed it because calculating seemed too complicated. Mileage. The IRS allows 67 cents per mile for business driving in 2025. Robert drove approximately 6,000 business miles last year. That's over $4,000 he didn't claim. Software subscriptions, project management tools, accounting software, cloud storage. These add up to hundreds or thousands annually. Professional development, every workshop, every industry book, every conference registration, all legitimate, all deductible, all unclaimed. Here's the beautiful irony. The solution takes less time than worrying about the problem. 15 minutes monthly, that's it. Let me walk you through the system that changed Robert's financial life. First, you need one dedicated business credit card, just one. You're not tracking 5 different cards anymore. Every business expense goes on this single card. Period. Research from behavioral economics tells us why this matters. When decisions require minimal effort, people actually make them. Dr. James Alm at Tulane University found that simplifying compliance processes increases participation rates dramatically. One card means one statement to review monthly. That's your complete expense record. Second, you categorize as you spend, not in April. In the moment. Most modern credit card apps let you add notes or tags immediately after a transaction. Robert started doing this. Coffee with the client? He adds business meeting in the app. Takes 5 seconds. Or use a simple expense tracking app. The leading options sync directly with your bank. They learn your patterns. After a few weeks, they categorize automatically. QuickBooks Self-Employed, Expensify, FreshBooks, Wave. All designed specifically for solo professionals. These aren't complicated enterprise systems. They're built for people like Robert who want simplicity. Third, you photograph receipts immediately. Your phone camera becomes your filing system. The IRS accepts digital records. You don't need shoeboxes anymore. Just snap a photo. Let the app organize it. Fourth, you create a simple mileage log system. This is where most people think it gets complicated. It doesn't. Modern mileage tracking apps use your phone's GPS. They automatically record trips. You just classify them, business or personal. Robert uses MileIQ. It runs in the background. At the end of each day, he spends 60 seconds swiping trips left or right. Business trips go right. Personal trips go left. 15 seconds per trip. Maybe 20 trips weekly. That's 5 minutes weekly. 20 minutes monthly. Fifth, you schedule one monthly review. 15 minutes. Same day each month. Robert chose the first Sunday. He sits down with coffee, opens his expense app, reviews the month's categorized expenses. Are they accurate? Is anything missing? Does he need to reclassify anything? That's it. The app generates his quarterly estimated tax payments. It creates year-end summaries. It exports everything his accountant needs. Let me tell you what happened in Robert's first year using this system. His deductions increased from approximately $8,000 to $24,000. That's $16,000 in additional deductions. At his tax rate, that saved him about $5,600 for 15 minutes monthly. But here's what really changed. The psychological burden disappeared. Research published in the Journal of Economic Behavior shows that financial stress doesn't come just from money problems. It comes from unresolved financial tasks, creating persistent cognitive load. Robert stopped worrying in March. He stopped dreading tax season. He knew exactly where he stood financially. That peace of mind. Researchers can't put a dollar value on it, but anyone who's experienced financial anxiety knows its worth. Now, I know what you're thinking. This sounds simple, but I'm not tech savvy. Fair concern. Let me address it directly. These apps are designed for regular people, not accountants. The interfaces use plain language. They ask simple questions. Was this trip for business? Yes or no? What category is this expense? Select from a list. If Robert could learn it at 62, you can learn it at any age. Most apps offer free trials. Start there. Test one for 30 days. See if it fits your workflow. And here's a secret. You don't need the fanciest system. A simple spreadsheet works if you prefer it. Column 1, date. Column 2, description. Column 3, amount. Column 4, category. Update it weekly. Takes 10 minutes. The automation isn't magic. It's consistency. It's having a system that requires minimal effort to maintain. Let me share some specific strategies that make this even easier. For home office deductions, take photos of your workspace. Measure it once. Calculate the percentage of your home it represents. Write it down. Now you have permanent documentation. You never need to recalculate it unless you move or renovate. For health insurance, create a digital folder. Drop in your annual summary statement each January. Done. For business meals, follow the 2025 rules. Restaurant meals are 100% deductible. Grab-and-go coffee is 50%. Note the business purpose immediately in your app. For equipment purchases, understand Section 179. You can often deduct the full purchase price in year 1. That computer. That software license. Fully deductible immediately for most small businesses. The key is capturing information when it happens, not reconstructing it months later. Here's what research from the OECD Forum on Tax Administration revealed. When tax systems reduce compliance burden, voluntary compliance increases significantly. Translation: make it easier, people actually do it. That's not just good for tax authorities, it's better for you, because every unclaimed deduction is money you've already earned but failed to keep. Think about that. You worked for that money. You paid expenses with it. You're entitled to deduct it. Not claiming it is like working overtime for free. Robert's accountant noticed something interesting in their second year working together. The appointment took half the usual time. Because Robert arrived with organized records. Everything categorized. Everything documented. Everything ready. His accountant could focus on strategy instead of data entry. They discussed retirement planning, tax-advantaged investment options, long-term financial optimization. The conversation shifted from reactive to proactive. That's the hidden benefit of the system. It doesn't just save money at tax time. It improves your entire financial planning. When you know your numbers accurately, you make better decisions throughout the year. You know whether you can afford that equipment upgrade, whether you should hire help, whether your pricing covers your actual costs. Running a side business without accurate financial tracking is like driving blindfolded. You might reach your destination, but you'll crash along the way. Let me give you the action steps to implement this starting today. Step 1. Choose your tool, either a dedicated expense app or a simple spreadsheet. Pick one. Don't overthink it. You can always switch later. Step 2. Get one business credit card if you don't have one already. Consolidate your business spending there. This single change eliminates 80% of tracking complexity. Step 3. Set up your mileage tracker if you drive for business. Install the app. Let it run for a week. Get comfortable with how it works. Step 4. Schedule your monthly review. Put it in your calendar. Recurring appointment. 15 minutes. Non-negotiable. Step 5. Start tracking today. Not next month. Not next quarter. Today, even if you start mid-year, you'll benefit. Partial records beat no records. Here's what you'll discover after 3 months. The system becomes automatic. You stop thinking about it. You just do it. Like brushing your teeth. Like checking your email. It becomes part of your routine. And suddenly, you're not leaving thousands of dollars on the table anymore. You're keeping what you've earned. Robert told me something last month that stuck with me. I spent 30 years letting someone else handle my money in a corporation. Now I'm in charge. This system makes me feel like I actually know what I'm doing. That confidence matters. Not just financially, psychologically. One final thought. The average self-employed person approaching retirement has accumulated less wealth than their salaried counterparts. Not because they earn less. Because they manage money less systematically. Research from multiple economic studies confirms this pattern, but it's preventable. Financial organization isn't about being perfect. It's about having systems that work despite human imperfection. This system works because it assumes you're busy. It assumes you'll forget things. It assumes you don't love accounting. It accommodates those realities while still delivering results. 15 minutes monthly. That's all it takes to stop the invisible tax leak. To capture every deduction you've earned. To sleep better knowing you're not giving away money unnecessarily. Robert's accountant calculated something interesting recently. Over 20 years, if Robert maintains his current deduction level compared to his previous pattern, he'll save approximately $112,000 in taxes. For 15 minutes monthly. That's $75,000 per hour of effort. I can't think of many activities with better returns. Neither can Robert. He wishes he'd started this 30 years ago. You don't have to wait 30 years. You can start today. Set up your system. Track your expenses. Claim what you've earned. Your future self will thank you.